Hello, my name is Steve Bigelow with the Candlestick Forum. There are some very strong candlestick power patterns that are recognized in these market conditions. Now remember, last week the Dow came back up. However, we pointed out that this was not a reversal signal. The only positive from this analysis was that there was kind of a wedge formation forming, so that if it traded positive and got through the 50-day moving average, the top of the wedge becomes the next likely target, which told us we had a few days, or at least a few days of positive trading, making our bullish recommendations work that much better. However, the next thing that we could analyze was that this was a positive trading power signal, what we call the J-hook plus. The J-hook plus is nothing more than a J-hook pattern that was formed right smack dab on a level that everybody else is watching, in this case, the 50-day moving average, making the probabilities very strong that they were heading for the 200-day moving average, which today they got to. So what do you do at this level? Well, you're in the overbought area, you're nudging the 200, but if they open this positive and trade positive, it's telling you they broke out through this level, and everybody and their brother sees that it's going through the 200, so they come rushing in. And what would be the indication they'd probably go through this level? Remember, wave 1 and wave 3 are usually the same, which means there's some more upside that could take you through the 200-day moving average. Add the fact that we did a bobble breakout in the S&P 500, which is another strong candlestick power pattern, one of the derivatives of a J-hook pattern. When it came up through the 200, we expected wave 3 to be the same as wave 1. Today, as you can see, there was this big downtrending resistance level from the past few months. Today's trading in the S&P 500, because of the strength of a bobble breakout, told us that there's probably some more upside. Next target likely would be coming up here to test this level. So knowing that, the benefits of knowing the strong candlestick patterns is the high probability expected results. So there's 3 J-hook patterns as we were illustrating. This is a J-hook. We have the benefit of the T-line that tells us this is exactly where this next wave of a J-hook was starting. So we had a fry pan bottom, strong price move, pull back right to the T-line with a morning star signal. Now we're in wave 3. So a J-hook pattern is nothing more than a pullback and then starting wave 3, as we're seeing in Amazon. Basically, it bounced off the 50 doing a belt hold type signal on Wednesday. Makes this very simple. If everything opens positive tomorrow, meaning the markets open positive and the biggies open positive like Amazon, we're probably in still a strong uptrend into wave 3. The J-hook patterns have expected results. The big best friend breakout, the consolidation, and when was the consolidation over? There's our morning star signal, followed by a doji sandwich, or your morning sandwich, which is a McMuffin. Double criteria for telling us that we're in an uptrend. First of all, the morning star signal is one of the 12 major signals. Expectation is upside. The doji sandwich is a strong candlestick signal, implying more upside. When you combine the two, that's that much greater probabilities your next trend is in progress. So we're seeing that same thing when we recommended KOS when it broke out with a trend kicker signal through the moving averages. Was it time to take profits? Notice what it didn't do. They could never close this back below the T-line And notice how they actually use the T line as a support. Makes this that even if you missed wave one, if it opens positive, you can expect wave three to be the same magnitude as wave one. The J-hook plus, as we're seeing in AUPH, made some very good profits on this because of the best friend signal, the doji gap up. Bearish engulfing, trying to take profits. The T-line can be seen as a support level, and now it's come back up through the resistance level. This tells us wave three, if this opens positive tomorrow, breaking through this level, is going to be the same magnitude as wave one. Or the bobble breakout, as we saw in the recommendation of EHTH, came up, failed right at the 200, came down, and there's your best friend signal. Again, a very strong bullish signal, back up through this 200. Now, why is this more relevant than just a J-hook pattern? We can see the J-hook pattern, but what do you think most investors are watching? They're watching to see whether the 200 is going to act as resistance, and if it's not, they all start piling in. We're already in it because we can recognize this pattern setup. So again, this is not rocket science. This is just identifying these signals and patterns that produce a high probability expected result and has two benefits. One, has a high probability of the direction, and two, the magnitude of the move is usually much stronger than just merely an uptrending stock in an uptrending market. Works both ways. Our recommendation on MGPI was based upon the bearish J-hook pattern. So you can still be in short positions, even in an uptrending market, so that you're not fully exposed one way or the other. And that's what our recommendation was on run. Notice that it did a shooting star, gap down, back through the 50, closed below the T line, and then a couple of days ago, or yesterday, I guess, it did a gap down doji, still trading lower, stochastics heading down. You can still short this one on weakness because that would give you wave one, wave two, and strong sell signals going into wave three. So this is easy. I don't want to say, let's say it this way. You can recognize what is happening in investor sentiment based upon the candlestick signals and using the T line. So we're still promoting our 2-week free trial. That gives you 2 weeks to check out our chat rooms, which is fortunately where everybody that's already familiar with candlestick signals and patterns are all looking for the same thing. So you have a constant supply of good trades. And if you're still in the learning process, it's a good place to say, why is that a good recommendation? And there'll be people in there that explain the signals and patterns. And I usually come in for twice a day and go through all the current trades that are working in the current market conditions. So try our 2-week free trial. You get stock picks, which aren't just for stock picks. The 2-minute video each evening shows you why those are being recommended. So with that, we'll see you in the chat rooms.